Good afternoon, everybody. Today's Friday, the 16th of September, 2011, and these markets had a big week this past week. The S&P 500 up nearly 5%. Nasdaq was up 6.4%, back to positive by 2.5% year to date, and the semiconductors, year to date 3.9%. Semiconductors were up 8.5% this week. So let's take a look at these markets and see if we're back in a bull market. And you take a look at the S&P 500, it doesn't look like what a bull market's supposed to look like, and that means we've still got a market that broke down through a major level of support that was tested numerous times, and we remain below that. And while we're below that prior support level and we have these declining 50, 100, 150 and 200-day moving averages, you simply can't trust this for anything more than a bounce. I'm not sure what it's going to take to get this market bullish again, other than a lot more time and healing for it. But right now, you look at that weekly chart. Yeah, we had a good week, and but it doesn't change the fact that, again, we're below all those declining moving averages, and maybe we're going to be similar to where we were last May and June, that is of 2010. That maybe we're not going to sell off hard, and we're just going to kind of grind sideways for a while and then reemerge into an uptrend. But right now, it doesn't seem the likely scenario. What seems more likely for now, I guess, would be just continued back and forth choppy action. This week was a good week. Last week, not as good. The week before was a good week. The week before that, not so good. So it's back and forth. It's a yo-yo market still. And if you take a look at that 30-minute time frame, we got back above the what we had this week. Of course, was we had that trend line break, and we were talking about the possibility of breaking the trend line. That it would not break below that more important support level at 114, and then we would get maybe a couple days of a bounce. I didn't think it would get nearly as high as it has. I was thinking that maybe about 118 and a half, 119 would be resistance. Then I was thinking, well, maybe it'll slow down up in here near about the 121 level. But obviously, we've continued higher. Today, we held on to the gains, added a little bit. S&P was up 72 cents, but it was kind of a flat day. Today was options expiration day as well. I think next week, nothing changes really. We still have to be very cautious about this market, and that's just you have to listen to the message of the market. The market is saying the market is not saying this is a double bottom. This is not what a double bottom looks like. This market's still kind of consolidating within this bearish flag, if you want to call it that. The longer it takes in here, the less importance that pattern kind of takes on. But we do remain just choppy back and forth, and it's tough to have conviction in a trade in either direction. We saw some big movers this week. Today we saw, for instance, Amazon up at all-time highs, breaking out past some key levels there. Apple very close to all-time highs on a closing basis, on a weekly closing basis. It did finish at an all-time high. On a daily closing basis, you can see it's closed above this level. Basically, it looks like one time. And then, of course, we saw a disaster in Netflix, which was down $14 today, and it is now down close to 50% over the last 2 months. So Netflix, here I have some Fibonacci. I was trying to look at what these key levels might be. The lows from 2008 up to the recent highs. We've gone past the 50% retracement. So there's major damage in here on heavy volume. And at the same time, again, Apple and Amazon. Amazon is at an all-time high. Apple's very close. And you look at the effect that's having on the Nasdaq. The Nasdaq is clearly the leading index right now, and is sending a much different picture than, or message rather, and through its different picture than the S&P 500 is. We actually closed above the 200-day moving average today, which was, so we surpassed the 50, the 100, the 50, and the 200. And if you recall the death cross occurred right here a couple weeks ago, which again shows you why you don't listen to things like the death cross and the Hindenburg Omen. And they have good scary names and that sort of thing, but they're not good for timing. The Nasdaq is now running up to this prior level we had observed, actually I think in the subscriber video, up near this 56.5 level. that it had surpassed that the 54 level that was the prior support, which is similar to the S&P 500 level here at 126. But of course, this 126 hasn't been surpassed. We're not even really close to it. The Nasdaq has shown that relative strength by moving up above that level, and now is approaching this 56. Well, it's at this 56 and a half prior important level as well. So you would think maybe we're due for a back off from this level, but the evidence doesn't suggest it. It shows that we've had a strong rally here this week, and again on the percentage basis, I forget where that went. Let's take a look here. On a percentage basis this week, the Nasdaq was up 6.4%. I know I underperformed this week, and I think a lot of people do because it's hard to believe what you're seeing in front of you. Despite the fact that or the sayings that we might repeat to ourselves, like we can't, we have to trade what we see, not what we believe, or suspend what we believe and trade what we observe is the official quote that I like to use. I don't know who said it originally, but it's hard to believe when you see this other weakness in the S&P 500, in the Russell 2000, and that sort of thing. But the fact is, this market is strong. 54 should be an important level as far as support if and when we begin to pull back in here, and so will that 50-day moving average with these prior little peaks at about 55 and a half. So here's that 50-day moving average at the 55 and a half level. So if we begin to pull back, I would look for support to hold near about that 55 and a half level. If that breaks down, the bigger area will be about $54 a share, and there's no guarantee that stuff's going to happen. Here we are also again at potential level of resistance. Where does the market come from? 6.5% this week. Where does it have the potential to go before it's likely to encounter resistance? This prior support level seems like that area. It doesn't mean you should sell short and this will be the top of this move. It means be aware of the possibility that sellers are going to show up in here, buyers are going to become less aggressive, and there's the possibility that we begin to pull back. Let's just let the market action dictate how we interact with price movement. The Russell 2000 really still remains a mess as well. This trend line held this week in here. We got a nice bounce. The bigger level, I guess, is up near this 50-day moving average in the prior peak at about just about $74 a share. So maybe we continue up towards that $74 a share, then back off, or maybe we begin to back off or just continue to go sideways. It's really a mess. This is the period of the market activity when we have these moving averages crossing back and forth, where it's telling us that there's indecision in this market. And when there's indecision, it simply can't have conviction in your trades. And you look at the bigger time frames and you see this big disaster in here, and where we are and where we've been finding this resistance recently in the Russell, and you kind of back it up to well, I didn't draw that properly. Let me start over with a horizontal line so we can do it properly. This level here at about 74, 74.80, 75, and then the bigger level up above at 77. So 74.80, well, we've got that 74 level at the 50-day moving average. So it seems like there's a lot of obstacles in the way that should prevent this Russell 2000 from moving higher again. But we have to be open-minded. We have to see what the market gives us. But if we start to break down next week and this pattern of higher highs and higher lows from this week starts breaking down, from $70 to $71 a share, I think you're going to at least see the 5-day moving average. That, of course, is moving up, so maybe it'll meet it at about $70 a share. And 70 has been an important level here recently as well. So the big movement this week was the semiconductors, and the semiconductors for the week up 8.5%. They're still down 5% year to date, but 8.5% for the week in here. We had spoken about this on throughout the week. As far as 29.5 being the level that we see how it deals with that, and I didn't think it would really make it past the $30 level. And there's nothing wrong with being wrong as long as it doesn't cost you money. There's how's that other saying go? Being wrong is okay, staying wrong isn't. So having the ability to say, okay, here's what I think will happen. I'm not going to stubbornly just short the SMH at $30 a share because I believe that it should be a level of resistance, and the market doesn't make sense and it's up too much, and that sort of thing. That's an illogical way. That's an emotional way to think about the market, and how you end up losing a lot of money with that mindset. The semiconductors, though, just a real powerful, steady uptrend this week. People say, well, it was just a short squeeze. Well, just a short squeeze. If you're long and you just make money on a short squeeze and 8% just on a short squeeze, I'll take that any day. I don't care if it's low volume. I don't care if it's just a short squeeze or whatever it is. If you're up 8%, you're up 8%. Have a way to protect it. Have a way to move it to cash when things go get worse. Because with a declining 50-day moving average, I do not expect this rally will hold. I think we will. I would bet. Not a lot of them, but I would bet dollars to donuts next week that we do come back down and see $30. It's not about making bets and being right, though. It's about observing the facts as they unfold and positioning yourself in a way that you can manage your risk and still have some a decent potential for gain. So the semiconductors, big rally this week. I would expect them to pull back to at least 30 next week. Financials were down 2 pennies today. For the week, what did these guys do? I forgot to look. For the week, they were up 5.5%. So the bears keep talking real loud about them, but there's not a lot of bearishness here since that last decline. We did see a lower low in here, but our range is basically like we've been talking about, 12 to 13 and a half, and that's a range bound market. Generally speaking, consolidations within a primary downtrend, which is what we have. So these consolidations in the directions of the longer term moving averages will generally be resolved back to the direction of the primary trend, longer term trend, which is lower. And we see this prior support at 13 and a half being the resistance level here on the weekly chart. If we get above that somehow, then maybe these things become more neutral and can heal. But this has clearly been a very big level, this 13 and a half, and it seems like at some point we should go back down below that $12 level and maybe go down to $11 a share. But the time just isn't right now. This market has been more neutral over the last month and a half, and it might do something similar to what the semiconductors did, which is to break out past that, if nothing more than just to irritate and annoy and cause angst amongst those who are short this for probably very good fundamental reasons. But that's the nature of the market. It's going to mess with your head a lot. And this is PG-13, otherwise I say something else. But gold has been very volatile recently. There's been all kinds of calls that this is a top. We don't have evidence of a top yet. We have evidence of volatility after a big run, and volatility generally peaks at turning points. Volume and volatility tend to peak at turning points, but it's really become more neutral. I think that you see this 50-day moving average continue up next week, and maybe gold comes down and the 50-day moving average comes up, and they meet each other somewhere in the middle. But it was an impressive week for the bulls. Hopefully you took advantage of it better than I did, but no one gets it right all the time. And anyways, have a good weekend. We'll talk to you next week. Thanks.